And thank you for joining us. My name's Heather Brooks, and we have E. Hill.
Hi, everybody.
Here from eXp Seniors Network, and we welcome all of you to What the HECM is a Reverse Mortgage. So we've got Mount Dora, Florida, Flagler Beach, the Villages, Maryland, Charlotte, North Carolina. Well, welcome. We are all from all over, which is great from the US. I will tell you that Ted Butler works 5 states on the West Coast. So if you're on the West Coast, listen up because he could help you out there. All right, Lake Wales, and we welcome all of you here. Today we have an amazing event. It is What the HECM is a Reverse Mortgage. And Ted Butler is back again. So if you were with us on April 27th in 2021, I had Ted Butler on here, and he talked about actually financing for seniors, and he went into what HECM loans were. If just a little background on Ted, he is with Mutual of Omaha. He's a reverse mortgage advisor. He's coming to us live from Bellevue, Washington. However, he does work up in Bellevue, Washington 2 weeks. And the other 2 weeks, he's on a sailboat down in Long Beach, California, working in the Long Beach offices down there. So I want to welcome Ted to back to the eXp Seniors Network for a second time, a couple years later. But thank you for coming back.
My absolute pleasure.
I appreciate it. The floor is yours. We're going to go ahead and turn off our mics. And any questions that come along, we'll let you know. Just letting you guys know that the last 15 minutes, we're going to have a question and answer. So if there is something that you want to ask, if it can wait till the end, we do ask that it wait till the end because he will answer them. We'll have you just turn on your mic and ask away. All right, go ahead, Ted. All yours.
Tremendous. I'm going to go ahead and share my screen now. And
I love this, Ted. There we go.
can everybody see that?
Yes, we can.
Perfect. So, and thanks so much, everybody. Heather and Eve, we have some really timely news to share, some really good information. And one of the things I really appreciate about being invited to this opportunity to speak with you today is I think we could all use some good news right now. There's been a lot of things going on, not a lot of them all great. And it's a real blessing to be a good news merchant, and a good news merchant, not only for those that you serve, but quite honestly for you as well as realtors. And we're going to take a look today at a program that some of you may be familiar with, some of you may never heard of before, and some of you may have some serious questions. So I'm going to encourage you to do this. Grab a pad and a pencil, if you would, because you're definitely going to make some notes. And we will have ample time for questions at the end, because more than likely, if a question pops up while we're in process, it very well may be answered in the next slide or two. But I'm going to begin really with one of the reasons that I'm here. And you may recognize this individual. This is Teresa Barthol from up here in Washington State. And she's not able to join us in person, but she had a really nice message that she wanted to share with you. So this is how we're going to start right now. Well, hi, everybody. And I'm just delighted to be joined with really the reason that I'm here, the person that's introduced me to this mastermind opportunity, and that is none other than Teresa Barthol. Teresa, it's awfully good to see you.
Thank you, Ted. I appreciate that.
Yeah.
I'm happy to be here in the virtual world. I apologize. I had a commitment to kind of my medical story, but I'm happy to be able to do this with you on Zoom. Thank you so much, and thanks for. I think they're in for a treat. Real estate agents with eXp to listen to you talk about this great lifestyle loan, and I personally, I've had a lot of conversations with you over the years that we've known each other, and my husband and I signed up with you to do the very same thing for our own house, right?
Yeah.
So,
Well, we've had some wonderful opportunities together, and a couple in particular that I'd love it if you could share about. Why don't you start off by telling us about your dear sweet friend Elizabeth?
yeah, well, what a great experience. I mean, she's turned out to be, she is so happy with the end result after talking to you and discovering what she could do with the lifestyle loan that it just, she emotes happiness every time I see her. But Elizabeth was somebody that, you know, she had retired and she had, you know, her income kind of established, and she was divorced, and she had assets to invest in a home here in the Mill Creek area where I live. And she bought it cash, right? The whole thing. And then it turned out to be just a miserable location for her. It was not the right setup, right? And that's where I entered in, and a friend recommended that I go talk to her, and then I did. And I sat down and we just started chatting, and I said, well, hey, have you heard about this lifestyle loan? She was thinking it was not going to be possible for her to find anything that she really loved, and she had a dream, and she really wanted to live in a really nice house, which is not what she really was living in. And we were able to use that cash from her sale and add a little more to it, I think, if I recall right. And then she has an amazing home on the golf course, and she was just entertaining this last week. She's just so proud and happy in the new location. And it's worked out well for her and for her family. And they are all delighted to see her in this new phase of her life. So it was nothing but a success story all the way around.
Well, it was a delight working with you and working with her through that process. And you're right, she absolutely glows with joy and contentment. She told me that she never thought that a little girl like her from Montana would end up living in such a lovely home. And it really was a dream of hers to, you know, spend her last chapter in a beautiful place. And you did a great job, Teresa, in helping her find just a real gem of a location.
Mm-hmm.
And
well, and it turned out she found a new neighborhood, new friends. She's got more room. It just was endless. And she, you know, it was a price she thought she never could touch.
So all we did was create a purchase opportunity using the lifestyle home loan, where she put a certain amount down. The loan carries the balance. She has no monthly mortgage payment to make. She retains full title to her property. She still gets to pay her property taxes and homeowners insurance and HOA fees. But it really allowed her to take a dramatic step up in quality of life. And closed on time, happily, and just a real joy,
It's a testimony to those people that think they should go out and buy cash and whether you have a little or a lot, maybe you should look where you're putting that in your home purchase when you're over 62, right?
It's a different strategy at this point in our lives. Our home definitely is an asset, and an asset that, if properly handled, can be an asset that can be consumed to enhance quality of life.
Mm-hmm.
We just closed on another one of your clients, and that was Linda. And how did that come about?
Oh, well, Linda happens to be a friend of a friend, and I had been out for kind of a walk with her. She just likes to walk. She had a terrible time in a community that she purchased a home, followed a friend, and then just it was non-rewarding, let's put it that way. And she ended up selling that home and moving back to the area where she worked before, and figuring nothing was going to be possible because she didn't have that much money to work with. And I asked her, I said, well, hey, why don't you talk to Ted? And this lifestyle alone, you don't need as much as you think you do. And she was able to buy a wonderful condo in a 65 and over community, or 55 and over community. Mm-hmm. And we were just there this last week celebrating with her on closing, and she was just ecstatic because she's got more space than she figured. She's got a wonderful view. She's got blooming trees around her, and a community with like-minded folks that she'll be able to connect with. So, plus a two-car garage. And she was thinking all she would be able to buy was maybe a mobile home. So maybe a big difference in her attitude and her lease on life going forward. And just very excited she was. So we were ready to cheer her on. She goes forward as well.
Well, I think for most people listening, they're going to get a lot of encouragement from hearing your story and you sharing the story about Elizabeth and Linda. From a realtor's perspective, how did the process go?
I thought it went great. I mean, in both cases, they got the education, they did the counseling, they followed the process. It was buy-in from the beginning. And, I can speak from it personally myself that, between my husband and I, the more we learned about it, the more we thought, hey, this is like unfolding many more benefits than we thought we'd have from doing it this way. And we were not, we're kind of in a place where we're looking at retirement going forward. Mike is retired right now, but I'd like to retire. And speaking of, hey, while he's walking in.
Hey, Mike. Good to see you.
He can't hear you. There he is.
Oh, that was nice. Cameo appearance right on time.
Right on time, right? There he goes. So anyway, there's other things that we now can do, and I'll maybe be able to retire sooner than I think.
Oh, I don't know. People are going to be happy to hear that.
Yeah, I don't know either, and maybe I'm not happy to call it quits either. So, at any rate, but it's all been good, and I am surprised at the amount of things that we can do, and that's my goal for my real estate career going forward, is just to focus on helping people, because it's so satisfying if you help them uncover what they think they can't do.
Yeah, it's amazing. And first of all, it starts with awareness. People have to know that they have this option. And so you, as a realtor, play a very pivotal role in placing in front of those that you serve what options they may have. They don't know what they don't know. And then as you go through that discovery process, as you learned, and as Elizabeth and Linda both learned, education really is the key. Giving people the information they need so they can make an informed decision. Just because it's a fit for somebody doesn't mean it might be the best course of action for them. So education first and foremost, and then a well thought out, easy to follow process that basically mirrors any other purchase contract process, and ends up with the jingling of a new set of house keys and a very happy homeowner.
Yeah, that's right. That's right. And, not to have a payment going forward is, terrific. And some of the, the idea too, that you still have the HOA dues to pay or whatever, those are still going to be your responsibility. But, combined with a house payment, it becomes a little unwieldy. And this way the HOA dues are palatable and understandable, and they now both live in communities where their grounds are being cared for and their house is being cared for, and they can go about enjoying the things that they enjoy with their life.
Marvelous. Well, Teresa, thanks so much for joining us. You're
welcome.
A good day today, and we'll look forward to catching up with you again later.
All right. Awesome. Thanks a lot, Ted.
Yeah. Bye-bye. Well, there we go. Teresa couldn't join us in person, but she certainly could join us via technology, which is marvelous. But I've got a question for those of you joining us. Who here would like to sell more homes this year, like Teresa? And who here would like to sell higher value homes this year, like Teresa? And who here would like to create more listings this year, like Teresa? Well, I'm just going to say on both of our behalves, we are glad that you are here, because that's really what we're going to be accomplishing today. I've been teaching people about this program for almost 100 years. Well, not quite, but over 20. And I love to learn, and I love to share what I learned. So I do a lot of teaching both to professional organizations as well as consumers. I have a weekly radio show in Los Angeles. I've been on television a number of times, and I really appreciate the opportunity to be of service. And I'm blessed to work for a company unlike any other company in our industry. How many of you listening right now are familiar with this television show? I'm going to tell you that the demographic that we are addressing, the baby boomers and beyond, they definitely know this TV show, Mutual of Omaha's Wild Kingdom. And there is no other company like Mutual of Omaha in the industry. And why is that important? Because as you go out and present new options for homeowners, especially options that they may have questions about, to have the power of a brand like Mutual of Omaha behind that is incredibly important. It brings you instant credibility, it brings you trust and confidence. Really a unique position in the industry. But we're here to talk about what the HECM for purchase is, and why we're looking at it. And I hate to start off with a graphic like this, but it's just the reality, guys. We are staring, I'm not going to say a recession in the face, but we're definitely staring an adjustment in the face. We've seen interest rates double over the last 2 years. You have seen firsthand what impact that increase in interest rates has done to your home buyers' borrowing capacity. It's cut it by 30% or more in many instances. Somebody who is going out looking for a $700,000 house now can't afford a $500,000 house for the same payment. And I will tell you, their income has not kept up with that dramatic rise in home values that we were all giddy about over the last few years. And it's probably going to get a bit worse before it gets better. This is a projection from Freddie Mac, and they are estimating that by the end of this year, we're going to see the housing market drop by about 30%. Some people think that's a bit bullish. Some people think it's a bit bearish, but it's really something important as business owners. And each one of us out here are our own business owners. We have to try and figure out how we're going to survive in a market like this. Well, we're going to equip you today with some of the tools to do that. And it is a new world in real estate. And let me ask you this, if you had access to a purchase product that allowed your older homeowners to retain more liquidity in retirement and not have a monthly mortgage payment, would that not be good news? Well, I would imagine that you're all nodding and smiling and saying, yes, Ted, of course, that's good news. Well, we are here to help you increase your sales by helping boomers and seniors downsize or right size to their dream home. And this is a mortgage program that allows them, it's kind of the way I like to consider it, it is the best of both worlds. It gives them the advantage of not having to make a monthly mortgage payment as they would as if they were to pay cash. But it also gives them the very important advantage of not having to put all of their cash into a purchase at this point in their life, because what people need in retirement is access to resources. They don't need to tie up all of their money in an illiquid investment like a piece of real estate. And so we're going to be talking about a program called the HECM for purchase. HECM stands for Home Equity Conversion Mortgage. That is the correct technical name for the modern reverse mortgage. We refer to it at Mutual of Omaha as the lifestyle home loan. It is a much more palatable and easy to understand concept for folks. But it's the same program. And the reason this is important is because if you work with financial advisors at all, you are going to find that the number one concern facing your older homeowners isn't death. It's running out of money in retirement. And a housing expense can be a huge consideration on how they're going to survive or thrive in retirement. How big is this market? Well, most of you are well versed in this, but it's significant. When we talk about baby boomers and beyond, we're talking almost 40% of all home buyers and over 50% of all home sellers. And I'm going to tell you, as the real estate or as the economy changes over the next few months and years, this demographic is going to become even more and more important as first-time home buyers are going to be stretched out, and families with children are probably going to wait. But it's going to be impactful. Why do boomers move? Well, it's for all sorts of reasons. Some of them are going to move closer to their kids. We talk to folks that want to move further away from their kids. We have folks that really want to improve the quality of their life. And we like to say right size. You're probably using that term as well, because it's not just downsize or upsize anymore. It's the right size. It's the right type of property for this point in their lives. They want something that perhaps has less maintenance or maybe a warmer climate. Many times the folks I'm working with, they're focused on getting a home with a dream kitchen or a dream shop, but the amenities that they've waited their entire life to take advantage of. And I really try and get people to get out of their mind the term downsizing. Yes, some older homeowners do downsize, but only half of them. The other half buy a house either the same size or larger. So it does not have to mean that they're going to buy a smaller house necessarily, and they certainly don't necessarily have to buy a house that's less value. Many times they're going to buy a house that's higher value. And how many people in retirement think about retiring or think about moving? Well, yeah, about 30% of them don't anticipate moving, but this is a huge number, either those that have or are thinking about moving in retirement. Over two-thirds are going to be your potential clients. And if you understand the demographics, the fact that 10,000 people every day are turning 62 in this country, we are so fortunate if this is an area of focus for your business, because you have built-in opportunity growth. So we're going to look at the HECM for purchase, also called the lifestyle home loan. Again, we have to say the R word because it is what it is. And a reverse mortgage is a slang term. It is a general term. It does not do justice for what we refer to as the modern reverse mortgage. This is a program that we're going to be talking about that was created by the Department of Housing and Urban Development in 1987. It was then taken a further step and actually signed into law in 1988. Think about that. This mortgage program that you're considering offering your home buyers is an actual federal law. And thankfully, in 2009, HUD realized that since it was nothing more than a mortgage, that yes, it could be used to purchase a house. Up until that point, somebody had to do a home equity conversion mortgage or had to purchase a house and then do a home equity conversion mortgage. But now you can use it to actually purchase a home. An H4P is something that we refer to it as, again, the home equity conversion mortgage. It allows home buyers age 62 and over to make a one-time down payment and then have the mortgage carry the balance. And this mortgage has no monthly repayment required. All right. It is, again, like I said before, the best way to think about it is the best of both worlds. As with paying cash, there's no monthly mortgage payment, but also as with a conventional mortgage, you don't have to put all of your cash into the purchase. How does it work? Well, like I said, it's a mortgage. It's an FHA mortgage. How much is the down payment for your buyer? It depends. Everybody is going to have a different number. HUD uses a calculation where they use the age of the youngest home buyer, the purchase price or the appraised value, whichever is less, and then that week's expected rates. Our rates for the modern reverse mortgage get updated once a week. The older the homeowner, the lower their down payment is. So if you have age somebody 62, they're going to bring more money to the table than if you have a home buyer who's age 82. They're all going to have a different number. But it's important to understand this, that your home buyer retains title to their property with full rights and responsibilities of home ownership. And it's a loan, so whatever they borrow, they're going to pay back when they no longer live in the home. It's also a non-recourse loan. And non-recourse is a very technical term, but it means this. Your buyer's loan comes with a special type of mortgage insurance. Now, for instance, when I bought my first home, I put 20% down and the bank forced me to pay private mortgage insurance. Why? Because they wanted to protect themselves in case I defaulted. And so I paid insurance that protected the bank and not me. Of course, I didn't default on the payment, but it didn't mean that I didn't have to pay that insurance. We have no monthly mortgage payment for the home buyer to default on. Our mortgage insurance guarantees that the home is always going to stand for the debt. Now, we're getting ready to go into another significant downward cycle in real estate values. I don't think it's going to be as bad, hopefully, as it was in 2008 and 2009. But we also, what happened then, we saw millions of homeowners being upside down or underwater in their mortgages. Horrifically, we saw people just walk away from their homes. But if a borrower with a modern reverse mortgage should be in a situation, either when they go to sell the house or they have passed away and their home value has dropped below what they owe on their mortgage, this mortgage insurance covers that shortfall, not only for the lender, but it covers that shortfall for the homeowner, and it covers that shortfall for their heirs as well. It's the only mortgage that comes with this type of protection. Here's an interesting fun fact. With the modern reverse mortgage, they can refinance their home down the road. Right now, interest rates are high. When interest rates go back down again, they may be very interested in refinancing to take advantage of lower interest rates, or as home values go up, they can refinance their home as well. This is not a dead-end loan by any means. And at the end is either when they decide to sell the house and move, they'll pay off the mortgage out of the proceeds of their home, and then the homeowner keeps the remaining equity. But if they are in the home when they pass away, the heirs will decide what they want to do with the property. 9 times out of 10, they're going to sell the property. They'll pay off what's owed, and then the heirs get the remaining equity. And HUD is very conservative with their numbers. So unless there's a dramatic downturn in real estate values, there's usually plenty of equity left at the end. And we do a lot of purchase for new construction. We offer pre-qualification. We are experts in this area. Mutual of Omaha happens to be by far the largest lender for reverse for purchase in the entire country. If any of you work with new construction or want to work with new construction, let me know. We have incredible relationships with almost all major builders. They love the HECM for purchase product, truly. At the end, we talked about this. No other asset other than the house is going to be used to repay the debt. And people say, well, Ted, that sounds great, but this non-recourse guarantee, I mean, how do we know it's real? Well, I took this straight out of final loan documents for the borrower. Do you see this where it says the borrower is notified that she shall have no personal liability for payment of this debt? The lender or the company may enforce this debt only through the sale of the property. There is no other mortgage that comes with that language. Of course, with a regular mortgage, they have to pay back what they borrowed. Doesn't matter with the value of the house, but with the reverse mortgage, they're protected and the heirs are protected. What kind of properties can we do this with? Well, 1 to 2 4-unit properties, manufactured homes built after June 1976, condos, they have to be FHA approved. And especially if you're looking at a purchase, we can get condos approved. We have a great department that specializes in condo approval. But if that condo that your home buyer wants to purchase is not already FHA approved, best to add at least a month to the process to make sure that we gain approval before they submit an offer and go through the process. PUDs, townhouses, properties in a living trust. Does this sound too good to be true? Well, let's take a look at an example. All right. And let me bring this over. I wasn't really great in trying to embed some of these videos. So here we go.
I want to talk to you about a couple named Jack and Diane. Jack and Diane are nearing retirement in the house they've lived in for the last 25 years that no longer fits their active adult lifestyle. They really want a single-story home with an upgraded kitchen and a low-maintenance yard that's located closer to their grandchildren. They looked online and found a perfect active adult community that checked all of their boxes. The problem is that they haven't been home shopping for over 20 years, and taking out a mortgage while on a fixed income in retirement causes concern. Jack and Diane have $500,000 from the sale of their previous home, and they're planning on using this cash to purchase their new home. They don't want to tap into their retirement accounts, so they're not sure if they can buy the home they really want. Jack and Diane contact you with a budget of $500,000, and they are excited to buy their next dream home. Unfortunately, at that price and with limited inventory, you can't find anything that satisfies their wish list. To find their perfect home with a $750,000 purchase price that checks all of their boxes is way outside of their budget. Their dreams quickly turn to disappointment. To make matters worse, you lost the opportunity to sell a home to a very motivated buyer. This is where the story ends for most people. After all, there's no way they can buy this home. Or is there? Until today, you may have felt that there's no way to sell a home to aging boomers who don't have enough to pay cash, especially when they don't want a mortgage payment during their retirement years. However, there is one little-known strategy that most realtors aren't aware of. Instead of Jack and Diane moving on as a lost opportunity, you can now show them how they can afford to buy the home that has everything they're looking for. The Home Equity Conversion Mortgage for Purchase, or H4P for short, is designed for buyers ages 62 plus and requires a one-time down payment of roughly 50% of the purchase price and can increase their purchasing power. Jack and Diane really can purchase their dream home valued at $750,000 for a one-time down payment of only $347,500. So not only can they purchase a home with you, but they also have $152,500 left over to supplement their savings. Do you want to sell more homes with no pushback on price? Do you want to gain a competitive advantage over other agents in your market and convert lost opportunities into closed sales? How about all of the above? Contact us today to learn why we're the nation's largest H4P lender with loan specialists in 48 states. We're here to help you turn lost opportunities into sales.
Well, there we go. Another view into the lifestyle home loan, Jack and Diane. But how about we take a real life example? Do you remember one of Teresa's clients, Elizabeth?
I want to talk to you about a couple named Jack and Diane.
And well, this is Elizabeth's story. Okay. This was taken one day in her house. She has adorable kids, absolutely adorable. And so for Elizabeth, she's 73. She was looking for her dream home in retirement. She was tired of living. It certainly wasn't a dump. Okay. Don't get me wrong, but it was not a great place. And the neighborhood had changed since she moved in. And she felt it was time for her. She wanted quality of life for her and Jock, that's the poodle, and Tabby, which is her fur family. And Teresa helped her find a beautiful home for $885,000. But she wanted no monthly mortgage payment. And she didn't want to have to put all of her cash into an illiquid asset. So based on her age, that week's expected rate, her down payment was $506,000. And she literally traded her older, smaller, less desirable home for her dream home in retirement. So how does this process look like? Well, as I mentioned earlier, awareness is one of the most important aspects. You need to be aware and thoroughly comfortable with this as an option to provide your clients. If you're confident, they're going to be confident. And simply put this down on the table when they're looking at a purchase alongside what a cash purchase would look like or a conventional purchase. Let the numbers take care of themselves. I always tell folks, you're going to make the right decision as long as you have the right information. Education is key. We have beautiful, high quality collateral material. And hopefully you've been sent. I have two great pieces that I wanted to share with you. One was a home buyer's guide. One is an open house flyer that we can customize for you if you want to have your name and contact information on them. But really, high quality educational pieces that will do the heavy lifting for you. You don't have to be an expert to try and explain this to them. Let our collateral pieces do that. But as you're working with your clients, let me know, or I'll be happy to introduce you to one of our specialists in your area. Let us run scenarios for you. All we need to know is what your home buyers' ages are and whether they have a certain amount of down payment that they want to use, or they're looking at a certain purchase price. And we can run scenarios from either direction to show you exactly what they would qualify for. But don't be surprised, as what happened for both Elizabeth and Linda. I mean, keep in mind, Elizabeth was looking at buying a $500,000 house. She ended up buying an $850,000 house from Teresa. Linda was looking at a $450,000 house. She ended up buying a $622,000 house from Teresa. Don't be surprised how dramatic your opportunity will expand once you introduce the HECM for purchase. An important step in the process is to get your clients pre-approved. We have an excellent fully underwritten pre-approval process. It takes about 24 to 48 hours. There's nothing more powerful for you to be armed with when you're out looking at houses with your clients and you've got a bona fide pre-approval letter from a well-known lender that you can put down on the table when you go ahead and make that offer and submit your offer in confidence. Things are a little bit different today than they were a few months ago. We're not seeing a lot of full cash purchases. We're kind of back to normal. People aren't overbidding. Homes aren't selling in 24 hours. Everything is kind of cooling down a little bit. And when you place an offer with a high down payment, like you will have with this program, your offer is going to go to the top of the stack. And please, when you make an offer, just use a 30-day close. We can close in less time, but we really don't accept offers for less than 30 days. We just want to make sure that everybody can get everything done. 30 days is pretty standard. And then, just like every other loan, we'll go through an application with your client. An appraisal will be done, regular underwriting approval, and then close, and happy home buyer and happy realtor. This is an example of one of our open house flyers that we create. We can do this through the MLS. We just pull down the pictures and the verbiage and create a matrix based on age, what their expected down payment will be. We can co-brand it for you. It's a very, very powerful piece. You just leave those in the open houses and it's great. And the best way to get started is really just to have a conversation. Give me a call. I don't care whether you're in the 5 Western states or not. I will be more than happy to help you understand how this program works. And my direct number is 425-891-6644. Again, 425-891-6644 or T Butler at Mutual Mortgage. And I will coach you on how to develop a book of business for this. First of all, you can just start by identifying clients that you're already working with that are 62 or older, or that you've worked with in the past, particularly those clients that you weren't able to find a house for because of them not being able to qualify for that for their mortgage. And if you have somebody looking right now, great. The next step would be to get them pre-approved, allow us to help illustrate that. And we will sit down with you and help you develop farming plans, because there is a huge number of older homeowners sitting in homes that are not suitable for them right now. Homes that are too large, too many stairs, too big of a yard, and they don't think they have an option to sell that house today and buy something that they want. But you know now that there's a special finance tool that will open up doors that they may seem to be closed right now. We can help you identify those demographics, and you can create farm lists to help create some more marketing.
Okay. Ted, I've got a couple questions from some people really fast. One, Carla wants to know, do you service Arizona?
I do. I do a lot of business in Arizona. It's amazing how many people from Washington and California move to Arizona.
Yeah. So Carla, there's your answer. Stephanie Oliver wants to know, what is the time duration that the heirs have to sell the property and repay the debt once a homeowner passes?
That's a great question. So when somebody passes away with a regular mortgage, the bank doesn't care. They will begin foreclosure in 90 days. They don't care. It happens every day. People pass away all the time. It's interesting. With the reverse mortgage, HUD realized that people have real life situations. So a homeowner's heirs are going to be given 6 months to determine what they want to do with the property. And if they can't get it handled in 6 months, they can ask for, and they'll be granted 2 additional 3-month extensions. So in essence, the heirs are going to have 6 to 12 months as long as the heirs follow the proper steps. Just like with a conventional mortgage, the heirs, it's incumbent upon the heirs to contact the servicer and let them know, that there's somebody there taking care of things. Within 30 days, they need to send the servicer what's called a letter of intent. And that just means, hey, mom's passed away. My brothers and I are trying to get the house ready for sale. We just want to let you know this is what we're doing. Great. That will give them 6 months. As it gets close to the 6-month deadline, if they haven't been able to get the house sold, all they have to do is send another letter saying, hey, the housing market has slowed down. We're still trying to get it sold. They'll get another 3-month extension. And as that extension gets ready to expire, they can ask for a second one. So 6 to 12 months in order to get the house sold. Unfortunately, I get called many times from folks who didn't do that, and the banks are beginning foreclosure. It's no different than a conventional mortgage. The bank is going to get paid, but hopefully the homeowners have told their kids that they're in a reverse mortgage. And if any of you are in a situation where you have questions about reverse mortgages, please give me a call. I'll be happy to help walk you through what those steps might look like. Good question.
Would you be able to, Holly wants to know, do you service New Hampshire? And I know you don't, because you've got the 5 Westerns. However, if people can call you that are in other states, so you could perhaps give them more people that you work with in those offices, that would be great. Yep. Again, if you can, Ted, just give us, there you go. Never mind. There you go. There's Ted's information.
Oh, no, not really. This isn't my information. This is just
your email. That's your email.
My email address.
If people need to reach out to you, at least they can reach out to you and they have your email. And what's your phone number again? I'm just going to write it in the chat for everybody.
It's 425-891-6644. So I can help anybody directly in Washington, Oregon, California, Arizona, and Idaho. That's where I focus my efforts. I can absolutely connect you to one of our HECM for purchase specialists in any of those other states that you're in right now. And there's nothing like a warm personal introduction to make sure that you're going to be in the right hands to take care of you properly. And here's something else. Today, we've just done a 30,000-foot overview of what this program looks like. You no doubt have a lot of questions, but there's some of you who are really serious about this and say, you know what, Ted, I really want to incorporate this as part of my business plan for 2023. What can I do to get really, really good at this? Well, it's just going to take a little bit of an investment of time. And every month we have an outstanding training that we offer. It is a lifestyle home loan realtor certification course. Okay. It's a 2-hour investment. It doesn't cost you any money, but you will be taken A through Z, all of the steps in how to identify opportunities, how to quantify what that opportunity could look like for your clients. We'll go over intricate explanations of the marketing portal that we have so you can create your own marketing pieces and teach you how to market and really turn this into a very powerful arrow in your quiver of tools that you use when you service your clients. Today's marketplace is challenging. The difference between success and failure has nothing to do with that marketplace. The difference between success and failure is how are we as individuals going to confront this new reality that we're dealing with. Believe me, there are going to be plenty of realtors who are going to have breakout years this year. We're going to have plenty of realtors who have their best year ever. And it's going to be the realtors who are going to do something differently than what perhaps they've been doing in the past years. Here is a golden opportunity to gain entry to one of the largest, most stable home buyer, home seller segments, that boomer and beyond area, and at the same time, provide a financial tool that gives that buyer unequaled protection and safety and financial advantage. You could see the joy that Teresa had in sharing with you the success that she's had with this program. It is real. It is palatable. Yes, we're always happy when we get to sell somebody a home, but it takes it to a whole nother level when you work with that older homeowner and you know that you put them in the safest, smartest financial position that they can possibly be at this point in their time. So coming up Tuesday, February 21st, 9 a.m. to 11 a.m. Pacific time, email me. I will be happy to send you this link, or I don't know, Heather, if you could copy that and put it into.
Kristen Sanchez actually posted the link for us over there.
Perfect.
She did already. I already put all the information in there as well as your phone number.
Great. So
I would love to open it up
Yep.
when you're done so people can ask you questions.
I just want to wrap up by saying this. I'm very thankful to have people like Teresa in my life, and I love the impact that she has in those that she serves. And I look at each and every one of you as somebody as equally as important with the impact that you have the potential to bring to those that you serve. If I can be a conduit for you to help more people, to help people to greater safety and security, I know you're going to sell more homes using this program. I know you're going to sell homes at a much higher value, and I know you're going to make more money when you sell those higher value homes. But it goes beyond that. And I want to help be a conduit for you to really allow you, like I said in the very beginning, to be good news merchants for those that you come in contact with. So thanks, guys, for the opportunity. And I can't wait to hear your questions.
Anybody have a question? I would appreciate if you could.
We have a few coming in the chat.
Well, I'd love for them to open up their mic and ask themselves so we can engage in conversation. So
Hey, Ted.
Hi
there
there.
we go.
Ted, it's Debbie Gentry from the Villages. Thanks for coming back.
My pleasure. Debbie.
Do you have a current, based on the current interest rates, a chart of if they're both 62, what the percentage is versus if they're 82?
Yep.
Or something?
Yep. I can send that to you. You bet.
Okay. Can I drop my email into the chat and you pick it up?
Yep. I'm going to, you pop it in and I will copy it and paste it.
Thank you very much.
My pleasure, Deb. Yeah, all of our information gets updated. We have an incredible marketing team, and the resources that you have available are really outstanding. So Debbie,
Patricia Ewing has a question.
Okay.
Actually, if you have the chart, I've got a lot of people asking for that chart. So if you're able to maybe pop it into the chat box for us, that would be
no. It'll take me a moment to go grab. I'll be happy to send it to you, and if you want to disperse it, that would be great.
I'll do that into our group. I'll post it tomorrow for everybody in the group, and that's great. You've got my email.
Yep.
So then that way everybody can go ahead and see it when we post everything tomorrow. By the way, let's go back to Patricia. Patricia, you can unmute yourself.
Yes. Several years ago, I took a CE class on HECM mortgages, and I was told at that time they didn't do condos. And I noticed one of Teresa's clients bought a condo. Is that a relatively new thing that we can do condos now?
No, we've been able to do condos since 2009.
Well, okay.
Yeah, it has to be an FHA approved condo.
Yeah, maybe that was a problem. I don't think in the Orlando area, many of the condos at the time were FHA approved.
I love Florida. My heart breaks in Florida. It has really been challenging in the condo environment in Florida. I'm just going to say,
All
yeah,
right.
it's a
I
real
thought,
challenge.
yeah.
Yeah.
Okay.
Okay, Patricia, can you go ahead and answer and pop open the mic?
You calling the next Patricia?
Yes, Patricia Ann, please. Oh,
Yes,
Hi,
ma'am.
Patricia.
Patricia Ann, how are you, Ted?
I'm excellent, thanks.
Okay, I have a couple that bought or that refied, did the HECM back in 2009.
All right.
So now one of the one spouse has passed away and gone home and got his wings.
Awesome.
What position does that put the heirs, the two daughters, because they would like to see if they could pull out some of the equity that was left, if any, to improve the house? So
Well,
are they refining the current loan at a higher loan value?
So just to clarify, one of the two borrowers has passed away. The other still remains in the house.
Yes, the other still
Okay.
remains in the house. Yes,
All
that
right.
is.
So they're going to have two options. Either mom and dad, when they did the reverse mortgage, selected an option called the line of credit option, and there may be funds still available in that line of credit that they can access. If
Mhm.
there isn't, then their only other option then is to refinance and then use the new higher home value, and home values have definitely grown since then, and utilize some of that increase in equity to improve the property.
Okay, awesome. Is there a certain spread between the current loan balance? Does it have to be a 30% increase in equity, 50% increase in equity?
We can't measure it that way. It's really going to depend on the age, the home value, the current interest rate, and then what their current loan balance is. I could have told you 3 months ago that it would have been a slam dunk for them to refinance. But now that interest rates are literally twice as high as what they were 3 months ago, we're seeing far fewer refinances able to be done. But it's always important just to run the numbers. If you could find out from them what the age of their father is, what their current loan balance is, and you can tell me an estimated home value, I'll be happy to run a refinance calculation for you and let you know.
Okay, I have all that information.
Okay.
Also, I have moved from Texas to North Carolina. So I'm in a new market now.
Mhm.
And I want to add this HECM to my process, to my
Perfect.
marketing,
Mhm.
right?
Mhm.
Okay, so is it better for me to go like to Remine and pull out properties that are, where the homeowner's been there at least 15, 20 years? And kind of do a specific farming?
We can coach you. I'm going to encourage you to invest 2 hours on Tuesday, the 21st, and go through the HECM certification class. Part of that class, we go into an in-depth study of how to look at farm lists and ascertain, based on certain demographic aspects, who would be a potential person for this program. What we're trying to do is create two transactions for you. We'd love to help you find the person who's going to want to sell the house they're in currently, and then you can help them move into their dream home in retirement.
Sounds like a winner. I'll be there.
Awesome.
Ted, I love all these little gold nuggets of information that you're telling us. And you made mention of something. It's called a lifestyle loan. Is that a new terminology for this?
Yes.
Because I like that. That's a much better saying than
Isn't
a
it?
reverse mortgage or HECM. It's like sexier. Really
So
is.
last year we came to the market with a rebranded version of the HECM for Purchase. HECM for Purchase is a mouthful.
It is.
And we don't like saying reverse because reverse is it doesn't do it. Just it's It doesn't do it
If
justice.
a reverse mortgage is
Mhm.
also goes inside, it goes along with downsizing. There's a negative connotation to it, I guess.
Yeah.
Is
So the lifestyle
I
home
love
loan,
that.
yeah,
Lifestyle.
is what Mutual of Omaha now calls the HECM for purchase. Consumers love it. It's easy. They understand it. It explains what it is better than the other words. And so we have a whole set of collateral that references it as the lifestyle home loan. It was something that I pushed hard for. And you'll find that when you present lifestyle home loan information to your clients, their eyes are just going to light up.
Of course, well, because there's a different name to it.
Yeah.
We do have another question. We're kind of getting we're getting out of time here, but Kristen Sanchez, can you go ahead and unmute yourself and ask your question? There she goes.
Hi there. Quick question about, you said mobile home, double wide mobile homes older than or newer than 1976 are okay. Does it matter if it's on owned land or leased land?
Oh yeah, they have to own the land.
Owned
Yeah.
land only.
They have to own the land. It can't be Indian land. But Stephanie Oliver, I'd love to have a conversation with you. I'm just reading in the chat. Yeah, I'm interested to hear that Long Beach has homes that are going for over the asking amount.
Yeah, for a large city, we only have 150 homes on the market, and it's been pretty stable over the last month or so, but we're still seeing above asking amount. Yeah, it's pretty crazy.
Well, we have some pockets like that. And so one of the great things about using the lifestyle home loan, so granted, if somebody is still using cash to purchase, and that buyer really has gone away, when you put down an offer with the size of the down payment that comes with the lifestyle home loan, right away, that offer goes to the top of the list. You know, you're not putting down 5% or 10% or 20%. And it gives the seller a huge amount of confidence. Plus, when you submit a pre-approval letter with a name like Mutual of Omaha, you know, it's like a double-double. So I'll be happy to help you make sure that your buyers get an offer accepted.
Fabulous. It all sounds great. This is my first introduction to the product, and I'm totally on board. Sounds great. So I'm going to be joining you for that
Great.
webinar.
Yep. So my office is in the Wells Fargo Tower downtown, 111 Ocean Boulevard. And it would be great to get together and we can powwow and create some opportunity.
Fabulous. Thanks again for your time today. This is great.
You're welcome.
So Ted, we're going to wrap it up. I just want to thank you for a second time coming to hang out with us. But I promise I'm not going to let a couple years go by before you come back to EXP Seniors Network. We'll have you again much sooner. But this time I'm going to call it, you know, the lifestyle loan, you know, and we're going to talk about it.
The longevity lifestyle loan.
The longevity lifestyle.
Longevity lifestyle loan. I like that. Yeah, the lifestyle home loan is getting great traction. And I'm just gonna plant a little bug in your ears. The people who need help right now are builders. Okay, if you're in any area that has any new construction, they are being hammered. Okay, they have been caught with their pants down. They are sitting on inventory. Our product is unbelievably popular in that area right now. So if any of you are interested in new construction, let me know. We've got some really great tools and tricks, not tricks, but tools and opportunities to help you win in that scenario.
Okay. Thank you again. From myself, Eve Hill, and Laura, who is also part of EXP Seniors Network, we appreciate everybody joining us. I will be there. Yes, Ted, thank you. I will be there on Tuesday, February 21st.
Great.
So you'll see me.
When you guys sign up, just say, you know, who invited you. Just put my name in. That way I can keep track of everybody who came through this call. Would be great.
Thank you, Ted. I appreciate it. Go
awesome, guys.
Go register. We're going to put up the video for anybody who missed stuff or they want to rewatch it and hear more information because they didn't get enough down. That will be tomorrow up at EXP Seniors Network. We'll put it up at the top so you'll be able to see it. And then I will have a link to this webinar that he has with his phone number and his email for you guys. Got it. Everybody says that they're registering. So you should be, Ted. You should be getting a lot. You'll get to see all of us next week too, or in a couple
That'll be
weeks.
awesome, guys. I'll really look forward to it.
Thank you so much for joining us again. I appreciate it. Look forward to
guys.
seeing you guys all at another Talk Tuesday.
Thank
Bye.
you. Bye.
Bye-bye.
Thank you.